Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Hopefully your trading has been going well. Looking forward to our COT report today. Got a lot of fun stuff to talk about. And we'll kind of go over how it works, what the COT report is, how you can implement it into your trading, how you can use it to make money, right? Um, I'm going to give you a couple of different ways you can do this. By the way, Roger, I've got mine all filled out. Maybe you can take a look when we get to that point, just kind of compare it with yours. I filled mine out pretty quickly, so hopefully mine looks the same as yours. But yeah, we'll go from there. So we've got everything set up. And yeah, I just want to welcome everybody here. Also want to give a shout out to everybody in the recording. Just want to say hello to you, those that are watching this on the recording. Feel free to ask questions in the comment section below if that is what you are doing. If you're here live, feel free to ask questions in the chat box. So without further ado, let's go ahead and get started. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So this week's COT report, I've got it pulled up right here. I've got my journal pulled up. I have not filled out the particular signals for this week. I need to fill this part out, and I thought I'd do it with you guys, just so you can kind of see the process through. But first of all, let me explain what the COT report is for those of you that are new, or this is your first introduction to the COT report. Let's definitely talk about it. And if you have questions along the way, let me know. So basically, the COT report stands for Commitment of Traders, and it's a report that the government releases every week. So the CFTC arm of the government releases this every Friday at 4 p.m. Eastern. Like clockwork, and at least they most of the time have. We had a little bit of a debacle the last couple of months, which we're now over. We are up to date with the COT report, which is nice. They actually had a cyber attack and they weren't able to get us the COT report for a while, but we have the COT report now, which is really, really nice. We have the COT report and we are getting it weekly on schedule from the government every Friday at 4 p.m. Eastern. So, which is pretty awesome. Let me show you how you can find it on your own. If you're looking to create a journal just like mine, I will give you my journal if you want it. It's free. I'm not going to charge you for this. This is totally free to my clients. So I'll actually put this link in the chat box if you want to bookmark this for the future reference. You cannot edit it, but you are more than welcome to view it and use it how you wish, okay? Here's what I do. So here's how you can find it. If you go to cftc.gov, right here, this is what their homepage looks like, okay? And they have a lot of different stuff you can look at, okay? So the thing that I like to do is just come up here where this, I guess all these tabs are. Go to market data and economic analysis, and you'll see commitment of traders. You're just going to click on that, and then on your own dime and on your own time, please read this information. You're going to learn a lot about the COT report. There's a lot of information in here that you can read. When I say read this information, actually, it looks like they got rid of some stuff. No, here it is. You just have to click show and hide. Read this stuff right here, and it'll tell you more about what the COT report is, just when you have your own time, okay? There are lots of different types of COT reports, okay? So you have COT reports that are specific to agriculture, petroleum, natural gas, electricity, metals, on all sorts of different things. We're typically looking at the financial and traders in the financial futures report. So we click on this one, it says long format, and it's a really ugly looking piece of information. And there's a lot of stuff in here. I'm going to show you how I navigate this and how it can help you. Now, first of all, let me explain what this information is. So every week, traders who are on the Chicago Mercantile Exchange and on different exchanges are required to report their positions to the exchange. Okay. We are not on an exchange. You and I, we're too small of a trader. We're not a big business. We don't have an order book, so we don't have to report this information. But these big companies, these big institutions, big banks, they have to report to their corresponding exchange. Okay. And what we're able to do is get an outside look. So and then I guess the last thing is the exchange every week then gives this information to the government. The government then takes a couple of days, compiles it together, and then they release this data to us on Fridays. So on Tuesdays, you'll actually see that every date is a Tuesday. So the April 4th was a Tuesday, and that's the most recent report we have. So today, I guess yesterday was Tuesday. So technically there's a new report coming. It's in transit, but it will be released Friday. So once a week you get this report updated, okay? And again, the reason why this information is so helpful is it gives us an insider look at what the institutions are doing, where they're moving their money, what currencies they're buying, what currencies they're selling. It actually is a very helpful piece of information to help you kind of formalize what trades you're going to take for the week. Now, is this a short-term trading strategy? No, I got to make that clear up front. You do not use this to make short-term trades. When I mean short-term, it's not a great or an ideal thing to use if you're scalping. This can be helpful if you're looking to take swing trades and or long-term trades, okay? So when I'm looking on the 4-hour time frame, daily time frame, 1-hour time frame, maybe, and I find a demand zone on, say, like I don't know, the pound dollar, and I know that the banks are buying the pound, maybe shorting the dollar. Well, maybe I would like to buy the pound more aggressively at that demand zone, which you learn in my other webinars. So you learn about my 1, 2, 3 step model in the other webinars, right? But then you can use this to give you extra confirmation to see if that trade's actually going to work or has a better likelihood of working out because you have you have more intel as to what the big banks are doing. So you're not just kind of like blindly looking for like the 1, 2, 3 step liquidity. You're using this in addition to kind of give you that those currency pairs that you want to focus on. We have our top 6 signals every week from the COT report, which we're going to find out what those are right now. And basically your job is to kind of look at those first, I would say, find whichever currency pair has a signal. And if you find a good setup in the direction of the signal using the 1, 2, 3 step model, then it's probably going to be a good trade. Maybe better than some of the other trades that you take. Now, I don't want you to just use this exclusively and just go straight into the COT report. The COT report has weeks where it is amazing. It's absolutely just, you're going to crush the market with the COT report. Other weeks, the banks reposition and they're in this reposition mode and you can get caught inside of that. And so that's why I don't think the COT report is the only thing that you should use, but it is helpful. Okay, now back to the COT report. So when you're navigating the COT report, I like to kind of zoom in because my eyes are not that great. And you're going to see all these different things. You're going to see the dealer side, the asset manager side, leveraged funds, and other reportables. And there's also non-reportables. I won't go into each one of these, but basically what we want to look at is leveraged funds. Leveraged funds are, they're basically professional speculators. These are people who look to take what are called outright positions in the market, who intend to buy, say, the euro, or they intend to buy the pound or buy the yen or short the yen, whatever it is, and they're taking outright positions to take advantage of whatever the market is doing. Okay. So these guys are really good at their job. So we want to follow whatever these guys are doing in general. Great. So what I do is I just do a Control F and I search for what I want to find. So for example, if I want to find what the Australian dollar is doing, I just search AUD because that's the ticker for the Australian dollar. So here it is. Here's the Australian dollar on the Chicago Mercantile Exchange. And every unit is 100,000, is basically a contract. So it's 100,000 units. So So if there's 37, it's for example, if there's 32,000 contracts long on the Aussie right now by speculators, that means that I guess I'm trying to think of what that number would be in the millions, but just know that there's 32,000 contracts long on the Aussie and there's 27,000 contracts short. Okay. And each unit represents $100,000. Okay. That's all you need to know. And then I also like to look at the change from week to week. So over this last week, the institutions have added 741 contracts long on the Aussie, and they've decreased their short positions by 217 contracts. So just a little gee whiz. And then what I do is I grab this information and I put it inside my journal. Okay. So I put the long right here, the long side, the short side right here. Right over here, I put the change in position long, the change in position short, and then every other number that you see on here is just a derivative of what I inserted. So it's just like, okay, I've got my longs, I've got my shorts. Okay, this is a percent as if it were a percentage. 54% of positions are long, 45% are short on the Aussie. This is the sum of all positions. This information right here is the change long, change short, and then the net change was 958 contracts. Basically, this number minus this number gives us 958. And yeah, so anyway, that's all you really need to know. So now our job, basically when we're using the COT report, our job is to find the strongest currency and pin it against the worst currency. So it's like having a football game or a baseball, whatever season it is, I guess, right? Whatever sporting events are going on right now, take the worst baseball team in the league and pin it against the best baseball team in the league. And that's what you're trying to do. Okay. Because what happens is if you take the best team in the league and have them play a game or a match against the worst team in the league, who's going to win that game most likely? Probably the best team in the league is going to win that game. Like, if we ever had to, think about, like, for example, with like sports betting. In sports betting, you can bet on anything you want. And you have the spread. So they often adjust that spread to however worse or better they think the other team is against each other, right? In currencies, what's cool is we actually have the ability to kind of like forget the spread, just go straight to the best team, pick the worst team, pin them together, and no spread. It's just like pick your best guy, pin him against the worst guy, and then take a trade, which is really not really nice. So definitely prefer this over sports betting. I don't do any sports betting, just side note, but it's kind of nice that you have intel on what's going on in the market right here before it even happens, okay? Or as it's taking place, I guess. And technically, all of this stuff has already happened. Like the banks have already made these positions, but this should help you in terms of making a bias when you're looking for supply and demand zones, okay? So, okay, so now what we want to do is look at the most long currency and pin it against the most short currency. So if I look at this here, there's actually not a lot of really long currencies right now. In fact, it looks like really just the Aussie and maybe like the Kiwi are the most bought currencies right now, right? They're just barely over 50%. So there's not a lot of buying interest in a lot of currencies across the currency market. It makes sense that the Aussie is a bought currency. I'll just say why real quick. The Australian dollar has a tie to gold, so more than any other currency on the planet. So when gold goes up, typically the Australian dollar goes up, and when gold goes down, Australian dollar typically goes down. And on another side note, there's other things too, like oil and the Canadian dollar have a peg. So if oil goes down, Canadian dollar goes down. If oil goes up, Canadian dollar typically goes up. It's not a perfect correlation, but there is it's the closest correlation. If you had to pick any currency to oil, that would be the closest, would be the CAD, and when the Australian dollar, it would be gold. So anyway, so it makes sense because gold has gone up a lot recently. Gold's been up quite a bit, and Aussie's obviously up, and that's where the professional speculators are going right now, is buying the Aussie. Okay, cool. So now we have our two longest currency pairs. Now let's pick maybe the top two, maybe three worst currency pairs. So when you look through here, you got stuff that's below 50%. And then you got this one right here, the CAD. And actually the yen. The yen is actually the most shorted currency in the Forex market right now. So you say, okay, I'm going to mark that in red. So the yen is very short, very, very short. Yeah, big time. And then the next one up would probably be the CAD at 73% short. And then what's the next one up after that? Maybe we'll pick a third one. Yeah, go with the franc. Franc's pretty short. So yeah, we'll go there. We'll go there. Okay. Pick that one. Okay, great. All right. So now what we do is we want to make currency pairs because that's how we trade. That's how we trade in the markets, right? Is we got to trade them in pairs, right? So I got to pick which one of these is the strongest and which one is the worst, and then make that the trade setup. That basically this would be the trade for the week, right? So I would pick probably the Aussie and pin it against the yen. So the Aussie yen, and this would be a long position. So I'd want to go long on the Aussie yen, and that would be my number one trade to take. Because I'm taking the Aussie, buying the base currency, which is the first currency in the pair, and the quote currency is the yen, which is the second currency in the pair. So whenever you're buying an instrument, whenever you're buying a pair, you're buying the first currency and you're subsequently selling the second currency. So just so we're clear, if you ever go short or sell this currency, you're selling the base and buying the quote, which is so selling Aussies, buying yen, right? So just something to remember. So we're going long, so we're buying. Okay, the next one up would probably be maybe we'll pin the Aussie against the next most weak currency, which would be the Aussie CAD. So we look for an Aussie CAD long position. Then I'd probably say the next one would be an Aussie against the franc. And that would also be long. Okay. Then I would probably go with the Kiwi and I'd pin that against the yen. So the NZD yen, and I'd go long with that. Okay. And then I'd pin the Kiwi against the CAD. So I'd do an NZD CAD, also long. Okay. And then I would say, okay, NZD against the franc, also long. So everything's long this week. NZD, franc, long. And those would be the top 6 currency pairs to watch this week. Now, again, it doesn't mean that all 6 of those are just going to go flying high and it's going to be a great week. Sometimes it is. I mean, sometimes it's just perfect. Other weeks it's not. So what I would do is if I were trading this, I would look for long opportunities because I know the banks are accumulating. They're trying to buy Aussie yen. We know they're trying to buy Aussie yen. And we just want to buy where they're buying. Okay. And we'll have to find places where they're doing that, right? So so I would probably pull up let me pull up TradingView and let's go take a look at maybe the Aussie yen this week, and let's see if we can find some demand levels where we could have bought. So we'll do it from the start of the week to the I guess now, and we'll kind of figure that out. Let me load this up here and see if we can find an opportunity. And there's a lot of ways you can trade this. In fact, one way I used to trade this, just as a side note, I used to just grab all 6 signals, and you can do this. I still have clients that do this. And I actually, the very first prop firm I ever got funded with, this is what I used. I basically just took these top 6 signals and I just took them at the beginning of the week and I held them all week long and I closed them on Friday for whatever they were worth. If they lost money, then I closed them on Friday for a loss. If they made money, I'd close them on Friday for a win. And then on Monday or Sunday, I would start over and do that again. Okay. So, and that's what I did for a long time. I think for years I was doing it that way, but then I found some better ways to trade, and I just, with my smart money concepts, learning how to find liquidity zones, found that to be more successful. And so I kind of implemented that. But you can definitely use this on more of a simple standpoint. If you want to just take the top 6 signals and just buy, you can do that. Or again, another way is just to is find opportunities throughout the week where you can get a good level. So I'm going to show you what that would look like. So here's the Aussie yen. Let's find the beginning of this week. It looks like right here would have been the beginning of the week. Yeah, look, this would have been a great signal to start the week. Definitely. Starting right here. So the signal was to buy at the beginning of the week. And sure enough, like it is flying hot, definitely. So the way this would work is if you got the signal on Sunday, you would come in here and say, okay, great, I'm going to find supply demand zones. You can use an order block indicator like LuxAlgo. You can use a smart money concepts indicator by LuxAlgo. You can use Sonar Lab. There's a lot of different things you can use. Okay, so for example, if I were to use this, I would say, okay, great. It looks like, let me delete some stuff in here. You can see that these are order blocks. This green block is an institutional order block. This is another institutional order block. Here's another institutional order block. So I could buy on any one of these 3. Okay, that's an example. So you just wait for the market. You could place a pending order. You wait for the market to come to one of these and, tighten up that stop loss, let this thing ride type of thing. That's one way to do it. Another thing that you can do, is you could look for breaks of structure. So, for example, right on Monday, we broke a structure point right here. This is definitely a structure level. Right here and here. And then we broke structure right here. And so right after you break structure, the thing you want to do is find the demand that subsequently created the break of structure, right? So for example, if I rewind this, and I know I've already seen this, but like if you were right here at the beginning of the week and you see this and you're like, oh, hey, look, I've got a structure point. The market broke that structure right here. Okay, so who caused this? Who caused this break of structure? Well, technically, whatever accumulations took place in this area is basically what created that move, right? You had a move to the downside and then it V-shaped to the upside, and whatever took place in here is ultimately what created that break of structure, right? So that's a liquidity zone. It's a point of interest, right? So now if you fast forward the market, and I know I've already seen this, but you'll see obviously the market will dips into it, and immediately starts to go up. And then pretty much the market just kept going up from there on out, right? You could look for another place. This is another good spot. I don't know if we'll get into it, but you have another point of interest here. Let me go ahead and this is another structure point right here. You can see that this is structure, right? And so where's an order block of interest? Well, technically, whatever took place in this area is what created that break of structure. So this would probably be a good area to buy. And we know the banks are wanting to buy this. So I don't know if it'll tap into that. I don't think it did, but it is a good place to buy nonetheless. Yeah, I don't think it ever got back to it. It got pretty close right there. Yeah, because here we are a few days later. And yeah, it's up here now. So yeah, you're just looking for buy opportunities. Looks like we're close to there it is. Okay. So where would be another good buying opportunity moving forward? Well, based off of what I do, I would say, well, I kind of missed it, honestly, because again, you're looking for structure, breaks of structure. So here's another structure point, right? And the market broke that structure right here, right? So who created this break of structure? Like what's the mechanism that created this move? Well, basically whatever accumulation took place in this general area, right? Like whatever happened in here is what created that, is basically what formulated the power to be able to break to the upside and make a new leg higher, right? So if the market ever returned back to that area, there's a really good chance you're going to get a move back up, right? And that's exactly what happened. Like it came into, after it broke the structure, it came back down below the structure, tapped into the accumulation, and immediately went back up, right? Okay. So where would I go now? Right now, it's tough to say because you're in this consolidation, and I'm not really breaking a lot of structure. Okay, so my next area of interest on this pair, honestly, is not until here. This area is of interest to me. I would be willing to put a trade down right here. This would not be bad. You could put a stop just behind that, behind the liquidity. And yeah, you could probably go for 3-to-1, at least 3-to-1 on that type of a trade. Yeah. Let's go look at some others. This is an example. This is the top trade of the week, technically. There's other trades. You got the Aussie CAD. I'm not sure how that's done this week. Let's take a look. And you're looking for buys here since the beginning of the week. So the beginning of the week was right here. Started right here. And you can look for demand zones, right? It actually looks like it was kind of selling off at the beginning. It's come back a little bit, but it's been very much sideways all week. But there have been opportunities. This is why I like to find opportunities to buy. I don't want to just jump in on Sunday or Monday and just go ahead and just take the trade. I don't want to just jump in here and be like, oh, hey, it says to buy, I'm going to buy now. No, wait for an ideal opportunity. For me, that is the way to trade the COT report. Wait for the market to come into a demand. Like tell the market, I'm not buying unless you come here. Basically, have it come to your level, come to your zone, and then get in, right? So, so I guess that I need to go find structure back here to be able to find a zone, right? So, so I'll have to go back. Let me actually draw a horizontal line here, and let me see if I can find some past structure. So I'll have to go to like an hourly chart. Let's see if I can find something from the past. Okay, so back over here. So this is where we're at. There's a couple of places, right? So you can look at this and say, okay, great. The market's close to this area. It's coming back into close to this area. Okay, great. I need to find some places. So it appears that this market had a little bit of something right here. That could be a liquidity zone. This is definitely a liquidity zone right here. And let's see. There might have been something right here, but it looks like it's already been tapped into. It tapped in right there. Honestly, these are the two areas I'd be interested in. It looks like the market actually went just below that liquidity zone. Let's actually go take a look. I'm curious to see how this would have played. So from the beginning of the week, it looks like it liked this liquidity zone initially, and it popped up, and then it actually went just below that liquidity zone, and then it popped up pretty big from there. So this is not a great example. In fact, I think I would have whipsawed out on this trade right here. It looks like it just went barely below the liquidity and then it shot up, right? But you're just basically looking for opportunities, like where could I buy this, since I know that this is probably, like, the banks are accumulating right now. We know they're buying on this particular pair, so find places to do that, right? So if you can find a way to get in right here, great. If you can find a way to get in right here, great, we'll do that. whatever we can do. Let's go take a look at one more. Yeah, let's see, maybe the Aussie franc or maybe the Kiwi dollar. Yeah, maybe the Kiwi yen. Let's look at a Kiwi one. Yeah, let's do the Kiwi yen. Curious to see what that looks like this week. This one looks kind of sideways as well, but nonetheless, let's take a look. Let's pull up a horizontal line to the beginning of this week, which was right here. And we're looking for buys, right? Because that's what the banks are doing. So when you're looking at this one, you say, okay, great. I need to find some supply demand zones where I can do this. This one's actually kind of tough, to be honest. Like I'm trying to look at this, like how would have I traded this? First of all, I'd wait for a break of structure. That's always number one, right? So find a structure break and then go from there. So it looks like we had a structure break by Monday or Tuesday, right? This is a nice structure level right here. You've got all of this support, you've got some resistance right here, and then the market ultimately on Monday broke that level right here. So now you got a structure break. So the next thing you want to do is you want to find, okay, what created that move? That's how you're going to find the great trade. That's how you're going to find the opportunity. So you can use these indicators, like you can, like if I rewind, you can go back and use, for example, if you rewind, this order block detector will show you. Yeah, so the order block detector is saying that that's a good demand zone right there, right? This is a good demand zone right here. That's an institutional demand zone. You could use maybe this guy, and they're saying this whole thing is demand, right? And we've already seen this in hindsight, but here's the indicator telling you this beforehand, right? So now you let the market go forward. So it comes forward, dips into the demand, dips into basically this area, and then it starts to go up from there. And it's been way back and forth. It's actually technically still in that demand right now, but so since this one would be still playing out, where would my next area be? Where would I be interested in buying next? Well, if this demand level doesn't work out, the next areas I'd be interested in would be down here. So down in these areas would be the next demand level of interest. So I could look for a buy opportunity there potentially. And there's a good chance it might work out just because we know the banks are also buying this right now too. In all honesty, this looks a little bit bearish up here. Like this is a head and shoulders pattern. So maybe from a technical standpoint, it may go down for the next little bit. But I would say once it comes into this demand, you probably have a good chance of getting a move to the upside. So something like that. And that's how I would use the COT report if I were you. I wouldn't just go in and just take a trade, although it can work. And I've had success doing it that way. I think the most money and the least risk you're going to take is going to come from you looking for opportunities as you go on the charts after you take this information. Okay. So that's what I would do. Any questions up to this point? Any questions on the COT report? Questions on how I use this? To learn supply demand concepts, I know it's a lot of information. If you're new and you're learning about supply demand, I have several videos you can watch on the calendar. Some of them are also, I don't post all of them on YouTube, but some of them are on YouTube that you can watch. I actually have a liquidity video that I posted 2 weeks ago on YouTube. That's a good one. That's a good one to watch. You could definitely watch that one. And then I also have pretty much every live trading session I do in the mornings. So in the mornings, for me, so my Monday through Friday class, that's where I teach supply demand concepts, liquidity events, right? So if you're looking to learn more about supply demand and liquidity, you're going to want to come to those or maybe watch some recordings of those classes. Okay. CN says if we use liquidity zone and shift in market structure, won't it be better? Yes, yep, that's exactly what we were talking about. So basically, for example, we had a nice, like the reason why this moved worked right here was the very fact that we broke structure right here. And then the market just basically returned to liquidity, which is this right here. So whatever happened in here created this move. And so the market fell back into it. And that's why you got such a nice move out of this right here, was because you had a break of structure to the upside and the market pulled back into it, into the liquidity that created it. So yeah, this one's not as good, but that it still worked. I mean, there's still a trade to be had. Like if you had a trade in here inside this liquidity and rode that up, there's still 40 pips to be made on that, right? Not the best trade I've ever seen by far, but it's still an opportunity. I think the best opportunities that we've looked at so far would have been on the Aussie yen. This is a much better trend to start the week, and it was the number one trade of the week. This was the start of the week right here. And there have been several pullbacks into demand multiple times. This one is the one that's not tapped into yet. I really want this one because this is a break of structure right here. This broke structure right there, right? And this is that structure I was talking about. So ideally, this is actually a solid trade. This is like A1 trade setup right here. You got COT report on your side, you got liquidity zone. That the problem is can you get into the trade? Can we get in? Can we get an entry? Because we need the market to do this, and then we need it to do this, which it should do that if it can trigger. That's the only problem, is that can we get it back to that zone? It's a great setup though. It's a phenomenal setup right there. And it hasn't been tapped into yet. It's untapped liquidity. All of this is untapped. Never has the market been back to it. So you know that there's orders trapped right here. They're trapped. There's an imbalance of trades trapped right here. That's a great setup. So anyway, that I hope that's what you're saying, CN, or maybe I'm missing it. I don't know. But basically, that's the concept. So you got this break of structure. You identified it right here. And now you're waiting for the market to return to the liquidity that created that break. And then that's where you're going to get this 3-to-1 or 1-to-3 reward risk to reward ratio opportunity. Okay. So yeah, I'll keep my eye out. I mean, let's see, is there any order blocks that would help us? I mean, there's an order block right in there. So yeah, we found that on our own 1, 2, 3 steps process. We found that on our own, but even the order block indicator is saying the same thing. I'm curious if other time frames are saying the same thing. Yeah, they're saying that that's an order block. How about a 15-minute? It's an order block. Wow. Okay. How about a 2-hour? It's an order block. Yeah, that's, oh my gosh. If we could get it, that's a great trade. It looks like there's some selling pressure up here. We might run into that. So if it does, maybe we do get triggered in. That would be really cool. Okay, the 4-hour doesn't have it, but everything from the 3-hour down to a 15-minute has an order block right there. Yeah, everything from the 15-minute. I think I might post a trade there, guys. I really do. It may not trigger. I mean, how far does it need to go down? It needs to come down. Yeah, it needs to come down like 60 pips. But if we get it, yeah, it is beautiful, Roger. It really is. It's exactly what you want. Untapped liquidity. It's never been touched. Break of structure. Yeah, it's literally what you want to see. So, in fact, I think I'm going to post it right now. I think I'm just going to do it right now. It may not trigger, but heck, why not? Let's get into it. So, let me pull up that order block indicator again. I'm just curious to see some of these other ones. They're all saying it. They're all saying it. Even Sonar Labs. Sonar Labs is my least favorite one now. Because I love Lux Algo, but they're all saying that that's an order block. So, okay. Yeah. All right. So let me go ahead and set this up. Okay, so let me go ahead and take a picture of this. Let me get it set up and then I'll take a picture. Honestly, we might even be able to ride that up to here because there's supply. The next supply zone's right here. That's where the next supply is. We might be able to target all the way to that. So, okay, so I'm going to put in a buy right here. Actually, let me set up my liquidity. So I got liquidity. I'm going to say right here. And that's what pretty much every time frame's saying. Yeah, right there. 2 hour, same thing. 3 hour, yeah, it's the same thing. Okay. Went to the dentist today and they numbed up my face, so I'm sorry if my voice is a little different. My whole side is like numb right now. This is a great setup, guys. If it triggers, I mean, I hate it when they don't, but you just have to take them. You just have to set them up, and if they don't trigger, they don't trigger. But it's a great setup. Maybe we'll get it. Who knows? Like I said, there, if you go to that, what was it, the 3 hour? It appears there's a bunch of supply up here. So hopefully that supply pushes it down into our demand. If we can get it to tap into our demand, we're on our way. And what's so cool about this is if we can get it, it's a 1 to 4. So for every dollar you're risking, you're going for 4. So I'm going to risk 1% of my account on this trade. If I win, I'm going to make 4% of my account, right? It's a great trade if we can get it. All right. Okay, so let me draw this out so everybody knows what this is. This is the break of structure right here. It is here's the boss right here. Claudio, this is on a 1 hour time frame. It's probably viewable on the 15-minute and the 30-minute as well, maybe 2 hour. And then I'm just going to type, this is liquidity. Liquidity. Okay. Oh yeah, you win this, you're halfway through a challenge. If you can get this, you're halfway through a challenge. I just started another challenge just the other day with my Forex funds. I just started another one. I'm just collecting funded accounts at this point. It's pretty fun. I'm just collecting them now. Yeah. Plus, a lot of you have told me, Roger, I know you just started one with FTMO, and who else? I know I had several others sign up this week, and I know a few others signed up either today or yesterday. But a lot of the guys from our morning class started a challenge, and so I thought I'd do one at the same time. Okay, so this Aussie yen. Nice. Claudio. Yeah, my Forex, I love my Forex funds. I do. I really do. FTMO too. I love FTMO. FTMO's dashboard's the best, but I just like the rules a little bit better on my Forex fund. They're basically the same, just a little bit easier, I'd say, on my Forex funds. The only thing that stinks, I guess, is two things that I don't like about my Forex funds. Two things I don't like. You have to, dashboard's not as good. It's not terrible, but it's not as good as FTMO. And what else do I not like? The relative drawdowns. So like it's a daily relative drawdown. So if you have profits, if the trade goes up, and the market goes against you, you have that relative drawdown. But that's the only thing that stinks. Yeah, I'm posting this on Telegram right now. That's what I'm doing. I'm posting this right now as we speak. Give me 1 second while I grab this and set this up. I just thought if you guys have questions, let me know. But I just thought while I've got you here, I'll just go ahead and post the signal on Telegram right now. While I'm doing this, let me explain a concept. So I think I told you guys I went to Las Vegas a week ago, a little over a week ago. And it's always so interesting to me, like when I watch people gamble, especially on the machines. Why would you gamble on a machine? Like if you're gonna gamble, go gamble on a table or something like that. Why would you gamble on the machine is built to beat you? Like it's literally just there's no chance. There's no like I don't know. It just blows my mind that people will sit on a machine. Like it's literally built to beat you. Yeah, go to a poker board, go to a non-electronic roulette table. Like if you're I don't gamble either. I don't do that, but I just feel like if I were, the last place I would go is a machine. I'd never go to a machine. It just blows my mind. Okay, this is what did I say? The Aussie yen. I gotta grab that. But what I was saying is like when I used to trade Forex, I used to just show up to the market. I used to pull up my charts and I would just say, okay, great. Here's the charts. Let me just buy and sell right now. And I wouldn't wait for the price to come to me. And you really do just want to wait for the price to come to you. That's what these signals are for. It's just telling you like, hey, these are great places. If we can get the market to come into these zones, you're going to get a really great trade. But we need the market to come to these zones first. We don't want to just jump in just to jump in. Okay, so let me copy this. Put this in. And let me add. Okay, let's go ahead and grab, let me just change this up. So this is with the Aussie JPY. I love AJ. AJ is a great currency pair. Buy. It's a buy limit. And we are going to buy if the price gets to 88.748. And we'll take our profits up at 89.663 and we'll stop out if it gets down to 88.514. Okay. 88.748, 89.663. Stop loss. Yeah, you just go to the 1 hour chart. Yeah, that works. By the way, let me show you how that works. So give me 1 sec. Yeah, I think I got it. Correct me if I'm wrong. But so when you're on like so here's my challenge with my Forex funds. I have a video that I made that can help you guys work on these challenges. No, not work on these challenges. I made a video that will help you set up your MT4 platform because MT4 is kind of confusing. It took some time. Now it's like second nature to me. I know how to use this platform really, really well. So this is where the trades are actually taken, right? When you need to switch to like the Aussie yen, you'll just pull up the Aussie yen like this. You'll drag it over, drop it in, and you can pull it up. Now, if you don't have this watch list of all the currency pairs, what you're going to do is you're just going to right click on the symbols and you're going to click on it's symbols. Yeah, you're just going to click symbols. And now you can click on the pairs you want. And then you can click on them. And then the ones that are in gray, I don't have because I don't want them. But everything else that's in gold is showing because I trade those pairs. But you can trade other things too. Like you can trade CFDs, right? You got the SP 500, NAS 100. You can trade those if you want. I don't trade a lot of CFDs though. You got metals. You can trade metals, just crypto as well. You can trade crypto. I just trade Forex, so basically. But that's how you do it. And then the watch list is over here, your terminals right here, navigator, terminal, everything you basically need. But I made a video, it's on YouTube, that basically covers this. In fact, let me just grab that video real quick. For those of you that want it, let me find it real quick. And let me find it for you guys. Okay. This is it. It's called the best way to set up your charts. Here it is. I'm gonna put it in the chat box right there. So that'll help you get started. But yeah, so yeah, all on MT4. That's where I take my trades, at least. And then my analysis is always on TradingView. The analysis on MT4 is horrendous. It's terrible. Absolutely terrible. So I never do analysis on MT4. It's just the most horrible thing ever. Terrible experience. But if you come on here, it's actually not too bad. It's pretty nice. It's the best analysis platform on the planet. TradingView is. Everybody uses it. It's the standard at this point. Even if you don't trade on here, you just do your analysis on here. That's what everybody does. So, okay. Anyway, so that's a good trade. I'll look for some more trade setups, but in recap too, from our other trades, we do have a trade on this CAD yen, waiting for this one to come up and trigger. It should. I believe this is going to go up tonight and probably get us into a good sell up here. There's a lot of liquidity up in this area. This is a big fat trade, if you haven't noticed. Stop loss is pretty big, take profits pretty big. It's a big fat swing trade. So, and then our other trade is doing well. We triggered into this one this morning. Euro franc is doing good. We got tripped in this morning right down here. Our original entry was perfect. Look at that. We bought right there. I got in just a few minutes early though, just before that got in. So my entry's not quite as good, but right there. And now it's on its way up. So we'll see. We'll definitely see how far this thing goes. But it's a good trade. I'm glad to see it starting to work out. And we'll get more. We'll definitely get a lot more good trades too coming. Definitely get more. So, all right, guys, I'm probably gonna wrap up with that. I don't have many things. I don't have other things to cover. So, hopefully this COT report was informative to you. You guys have access to this. It's free. You can check this out throughout the week if you want. Otherwise, I try to update it on the weekends. You're also welcome to make your own and use it how you wish. So anyway, guys, appreciate your attendance today. Thanks for coming. Enjoy your evening, and we'll see you in the next webinar.